When critical inputs are concentrated in the hands of a strategic rival, supply is no longer an economic variable. It becomes a geopolitical weapon. And we have been seeing recently lots of geopolitical issues having to do with Venezuela, having to do with Greenland, having to do with lots of interesting countries where no one had thought about it before. But what does it mean? There's a bigger picture here. And this is what we're going to try to attempt to understand, because we now have geopolitical weapons. $17 billion. This is the valuation now attached to a rare earth miner in North America. Not because demand surged overnight, but because the world finally recognized where power actually resides. And power in this case is not missiles or ships. It's who controls the materials that make them function. To understand why this matters and why it raises the probability of future conflict, we must start with the chart in front of us. And my Patreon channel get to see the actual stocks that we're referring to, get to see what I'm buying and what's of interest. How rare earths power U.S. defense. So this is not rhetorical framing, right? It is a literal mapping of military capability to material dependency. So we're going to move from left to right. Air dominance, you see the little plane, to surface naval dominance, to undersea strategic deterrence. Each step increases rare earth intensity, technological reliance, and strategic fragility. F-35 fighter jet, right? We all know about that. Start on the left. The F-35, get this, consumes approximately 400 kilos, almost more than 800 pounds of rare earth elements. These materials are embedded in radar, sensor fusion systems, missile guidance, laser targeting, electronic drive motors. The elements listed below, as you could see them, we have some neodymium, samarium, terbium, are no substitutes. Without them, radar solution will collapse. The heat tolerance fails. Guidance precision degrades. This is no workaround. There is no workaround. Let's look at the middle one, a destroyer. The number jumped now, so we had 800 pounds. Now we are going to 5,000 pounds of rare earth mineral in one destroyer. Why the escalation? Well, because modern naval warfare is no longer steel on steel, it's sensor on sensor. Rare earths power the radar, the defense systems, the electronic warfare, the propulsion efficiency. This is where the chart stops being industrial and becomes strategic. In the past, they'll make it for us. Hold that thought. Further to the right, you've got yourself a submarine. This is what it's called an Apex platform submarine, U.S. deterrence. Almost 10,000 pounds for one. Silent propulsion, advanced sonar arrays, long duration reliability, precision navigation in denied environments. So basically, and the thing is now, you need to realize, is that over 70%, listen to this number, 70% of U.S. rare earth imports come from China. That's not a statistic, this is a conflict accelerant, literally. Because that's what's happening here. This is the year of the risk. This is the year of the cyclic risk, of the cyclical risk, of the demonic risk, whatever you want to call it. This is it. This is it. And when you've put that into the mix, i.e., the U.S. needs to get to the rare earth mineral. Look what the U.S. did just to try to get to Greenland. Okay? So why does supply concentration increases conflict risk? Well, here's a key insight most investors don't really fully grasp. Concentrated supply does not reduce conflict risk, it increases it. Because when one nation controls the upstream input to another nation's military capability, deterrence becomes unstable. China does not need to fire a missile to weaken US defense readiness. It only needs to, and it has done so, delay exports, tighten licensing, restrict processing capacity, and weaponize environmental enforcement. That's what they've done. All of these things have been done. So each of these actions can be framed as commercial while functioning as a strategic coercion. And history shows us this pattern repeatedly. Oil embargoes, semiconductor export controls, uranium enrichments, rare earth are the next escalation vector. Just because we don't talk too much about it anymore doesn't mean it's gone away. Now, why does this raise the probability of future conflict? Because I'm looking at 2026 as a year of conflict, the year of the black swan. We have systemic risk being built up in the system, even though you don't see it in the stock market, you don't see it in options market, you don't see it in the VIX, you don't see it in the volatility, but yet it's building up. And obviously, this is where you want to join this channel like mine, is we need to know before it happens. When once they invade Greenland, it's too late. When they take the guy out of Venezuela, it's too late. You need to know before. So if the U.S. defense planners believe rare earth could be restricted in a crisis, what do? Well, they must front load the production, stockpile aggressively, secure alternative supply chains, or act earlier than they would otherwise would. And where we come in is secure alternative supply chains. That is where you make the money. Because now you need to find out who are the other rare earth mineral in the US. And that's where I come in. This is how miscalculation happens as well. Not through aggression, but through fear of future constraint. When supply chains are weaponized, time horizons compress. And compressed time horizon historically lead to conflict. So the Wall Street trader is not the story, right? The opening image that we had, has to do with the CEO of a large rare earth mineral. He used to be a hedge fund manager, and he purchased that company, at the right time. I might say so because lots of money came in from the government. But the story is capital migration. Capital is leaving. Abstract leverage, narrative assets, and financial growth. And moving forward, physical bottlenecks, defense critical inputs, asset governments cannot allow to fail. This is not a speculative capital. This is a strategic capital. And that company with $17 billion in valuation is not about earnings. It's about optionality under conflict. And we probably have the same thing building up with quantum stocks. I bought one today, actually. So why markets will reprice this violently? Well, markets are still pricing rare earth as cyclical, intangible, interchangeable, globally fungible. Defense planners are not. They price them as non-substitutable, time-sensitive, conflict-constrained. When these two pricing frameworks collide, repricing is not gradual, it's violent. No, you don't hear about it because they don't tell you about it. They can't keep talking about rare earth all day. You heard it when they were talking about China, but they can't keep talking about rare earth. But it doesn't mean it's not happening. It doesn't mean you shouldn't be worried about it, because in the meantime, pressure is building up. The moment supply disruption moves from theoretical to credible, valuation models break, you cannot DCF, in other words, you cannot discounted cash flow a bottleneck during geopolitical stress. You option value sovereignty. So this chart, believe it or not, is a conflict map. Not about kilograms or pounds, it's about leverage asymmetry. When you've got fighters, destroyers, submarines, all rely on materials processed primarily by a strategic competitor, then military superiority becomes conditional. Any conditional superiority is unstable. That instability does not guarantee war, but it raises the probability of confrontation, miscalculation, and force acceleration. Rare earth are not the cause of future conflict. They are the terrain on which it may be decided.